Hey folks, Rachana Ranade here, and I welcome you all to a very important video in which we are going to discuss about the consequences if your trading strategy goes wrong. Now, to be honest, I did not think about this video topic. I do have a Zoom call with all my enrolled learners every single month, and in this month's Zoom call meeting, one of our learners suggested this video topic, and I'm going to discuss the entire example in detail about which script was he referring to, what was the position that he had taken, what went wrong. Everything in detail is what we are going to discuss in this video. But if you want to understand this video, you should have some basic level of knowledge about F&O. If you don't have any knowledge about F&O, we have our course. You can use that coupon code as well so that you can get some additional discount. So before we move on to the topic, let me quickly thank our viewers Jitendra Joshi and Geophysics Narsimlu, and special thanks to Geophysics. Why? Because he has mentioned that I'll show this video to my spouse. Thanks for that. So for the next 1 or 2 minutes, I want your 100% attention, and then only you will be able to understand this entire case. So my student was telling me that somewhere around second week of January, Adani Enterprises was trading somewhere around at 3,800 rupees. Okay. He did the technical analysis, and at that point he said that okay, I feel that somewhere around 3,600 he saw some sort of support, and that was the reason why he said I wrote a put. Basically, he sold a put at the premium of 100 rupees, and the strike price was 3,600 rupees. So simple tell here, 3,800 was the current market price, 3,600 was the strike price, and 100 rupees was the premium that he collected. Okay, if he has collected 100 rupees premium, then what will be his break even point? That will be 3,500. Okay till here? Fantastic. Now what happened, understand, because he had done my F&O course, he said he had hedged his position. He knew what would be his stop loss, everything was risk return, everything, and he said that I was lucky enough to get out just in time, just around the when the Hindenburg report was published, when the news started to come in. You know what happened after that, right? He said I came out with very minimal losses, but if I would have clung on to my position, hoping that it'll come back to its normalcy, thoda rukte hai, we'll wait for some time. And he said if someone would have waited till the first week of February, you know what had happened? Till the first week of February, the price had gone down to 1,000 rupees. Now understand what could have happened. What is the difference? 3,500 was the break-even point, correct? Now understand the mathematics. 3,500 was the break-even point. 1,000 rupees is the current market price. So what is the loss for one unit? It is 2,500. What is the lot size? Lot size is 250. So the total loss would have been 6,25,000 rupees per lot. Is that crazy? Answer is obviously yes. Now, if the loss amount would have been so huge, and he said that if I would not have that much amount of money, then what? What rights does the broker have? What will happen next is what we'll understand in the immediate next section of the video. Have a look at this image. If you want, you can pause the video, take a nice screenshot. What is this image all about? It is a SEBI guideline which discusses the rights and obligations of stockbrokers, sub-brokers and clients. Okay. Now, if you have looked at this very nicely, if you have taken the screenshot, now let me try and simplify this for you. Okay. Before we go on to the simplification process, what has happened till now? As I mentioned, hypothetically, we were not able to square off the position. Okay, we are at a position where, assuming Adani stock hit back to back lower circuits, assuming that the risk department, which ideally cuts your position if you are not able to pay the additional margin money, they were also not able to do that. And whatever is this huge loss of 6,25,000, you don't have the money to pay that also. So this is what we are discussing right now. Basically, we are talking about an extreme situation in today's video. Okay, what could happen in this case? Now, in this case, as per the guidelines, it is mentioned that first things first, what the broker will try and do, whatever stocks you have in your demat account, those will be first sold, and whatever money is due to the broker, that will be recovered by the broker first. Okay. Number two, if that money is also not enough, and assuming a case, we are now going to more extreme, the person goes insolvent or maybe the person dies also, can the broker also have a right to attach the person's estate, something like a real estate also? That is also allowed. But he can't just go into his house and say, chalo, aaj se tumhara ghar mera ho gaya. Of course, not like that. He will have to, properly go through a legal process. This will go to the court of law. He will have to wait for XYZ number of years till he wins the case. And then the broker basically will have a right to sell the house and recover his dues. I hope this part is clear. If you feel that, okay, how could I have known about this? Ideally, number one, as I mentioned, you can check the SEBI guidelines. Number two, check out your broker's website. In many brokers' websites, you will find this in a part. Where on the website, you'll have to check that. But I saw at least 5-6 brokers randomly. This part was there on the website. So this can be your homework. Go check out the websites and be sure that you know the worst case scenarios before you take up any trade. Well, now that you have understood a lot about this case, I'm sure you might be like, has this ever happened in the past? मराठी मी म्हणते चांभार चौकशा असतातच, स्वतःने काय केलंय नाही फरक नाही पडत, इतरांचं काही घडलंय का ह्याच्यात पहिलं नाक खुपसायचं असतं आपल्याला, बरोबर? So even if you didn't understand the last 1 or 2 sentences, it's okay. The main question that I was posing right now is, how do I understand if someone else has done a default or not? For that, let's go to the NSE India website. Here we have to go to the regulation tab, and inside the regulation tab you will see one point as defaulting clients. So if I click here, everything is given. What is the SEBI circular number, what is the exact definition of defaulting clients. You can read this whenever time permits, and here you can download an Excel sheet about all the clients who have defaulted till date. So what I'm going to do, I'll just open this quickly, and you will see that there are almost 476 cases of default. And if I just go to the top of this Excel sheet, you'll see the name, you'll see the PAN of the client, you'll see which trading member. So all the list of brokers also you can see. Some you might be Cholamandam Securities, Edelweiss, Geojit, HDFC Securities, you name it, ICICI, Kotak, everyone. So these defaulters have their accounts with multiple brokers. Okay, so these are different cases. Then you can also understand where in the F&O, what is the date, all sorts of things you will understand in this Excel sheet. So the intention is not to humiliate them, but just this was done with an intention to show you that your name, if defaulted, could appear on the NSE website as well. So whenever you are taking any position in F&O which has unlimited losses, please be sure that you have your stop losses in place and you also have hedged your position. So I hope you found a lot of value in today's video. If you did, don't forget to share this video with your friends. Don't forget to smash the like button as well. And if you want to learn any specific topic from me, don't forget to mention about that in the comment section below. If you want to learn more such topics, don't forget to click here. And if you have not yet subscribed to the channel, click here. Till then, take care. Jai Hind and bye-bye.